Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within the financial world. Today we're diving into a report from Redwood Trust Incorporated, and let's just say they're keeping their stakeholders informed about some important upcoming cash flows. Alright, so what exactly is this report about? It's a Form 8K, which basically means the company is reporting a significant event that shareholders need to know about right away. Think of it as a public announcement of something important that just happened. In this case, Redwood Trust Incorporated is letting everyone know about dividend declarations for their common and preferred stock, and also some senior notes. This is crucial for investors who own these different types of securities. Let's start with the common stock. This is what most people think of when they think of owning a piece of a company. Redwood Trust is announcing that they've declared a dividend of $0.18 per S-share for the fourth quarter of 2025. Now, what does that mean for you if you own their stock? It means that on the 30th of December 2025, if you were a shareholder of record on the 23rd of December, you'll be getting a little bit of cash back from the company for each share you own. It's a way for companies to share their profits directly with their owners. Next up, we have their preferred stock. This is a bit different from common stock. It usually pays a fixed dividend and has more priority than common stock if the company runs into trouble. Redwood Trust has a specific type called Series of Fixed Rate Reset Cumulative Redeemable Preferred Stock. For this particular stock, they're declaring a dividend of $0.625 per S-share. This dividend is expected to be paid on the 15th of January 2026 to those who own the stock on the 1st of January 2026. It's important to note that preferred stock dividends are often considered more reliable than common stock dividends. Now, Redwood Trust also has some debt instruments, also known as bonds. They have different sets of senior notes, which is basically the company borrowing money from investors and promising to pay it back with interest. We see mentions of 9.125% senior notes due 2029, and also 9.0% senior notes due 2029, and even 9.125% senior notes due 2030. While this particular filing doesn't detail specific interest payments for these notes, it is important to understand that these declarations for stocks often happen alongside other financial obligations. These senior notes represent significant debt that the company must manage. Looking at the company itself, Redwood Trust Incorporated is a real estate investment trust, or REIT. REITs are companies that own, operate, or finance income producing real estate. They often specialize in specific types of real estate, like commercial properties or residential mortgages. Redwood Trust focuses on a variety of investments within the real estate sector, including single-family rental homes and, as indicated by these notes, various forms of debt. At the end of the report, we see the signature of Brookie Carrillo, who is the Chief Financial Officer. This signifies that the company's financial leadership has officially signed off on this disclosure, confirming the accuracy of the information provided regarding these dividend declarations and the associated dates. It's a standard procedure ensuring accountability. Now let's put on our investor hats and think about what this all means. From a shareholder's perspective, these dividend announcements are generally positive. They suggest that the company is generating enough profit to return some of that value back to its investors. For common stockholders, the $0.18 per share dividend signifies a regular payout, and for preferred stockholders, the $0.625 per S-share indicates a consistent and likely higher yield due to the nature of preferred stock. However, it is always wise to look beyond just the dividend announcement. What's the overall financial health of Redwood Trust? Their business model, focused on real estate and debt, can be sensitive to interest rate changes and the broader economic climate. When interest rates rise, the cost of borrowing increases for the company, and the value of existing debt instruments can fall. One key thing to consider is the relationship between these declared dividends and the company's overall financial performance. While the report doesn't show the full financial statements, a company that consistently pays dividends is usually a sign of stability and confidence from management. However, it is crucial to analyze their revenue streams, their debt levels shown in other filings like quarterly or annual reports, and their cash flow to ensure these dividend payments are sustainable and not jeopardizing the company's long-term health. For instance, if the company's profits are declining but they're still paying out large dividends, that could be a red flag, signaling they might be cutting into their principal or future growth. In this specific filing, the most important takeaway is the clear communication of upcoming cash distributions to various stakeholders. It's a predictable event for investors, allowing them to plan accordingly. The dates provided are very precise, ensuring clarity for those who need to be stockholders of record to receive these payments. The fact that they are announcing this in December for payments in late December and January shows a forward-looking approach to financial management and investor relations. So, what's our take on this? Redwood Trust Incorporated appears to be a company that prioritizes returning value to its shareholders through dividends. This is often a good sign for investors looking for income. However, as with any investment, thorough due diligence is key. Always look at the company's broader financial picture, their assets, liabilities, revenue growth, and the market conditions they operate in before making any investment decisions. The real estate and finance sectors can be volatile, so understanding the risks associated with these types of investments is paramount. For Redwood Trust, the strength lies in their established presence in the real estate investment space and their consistent dividend payouts. A potential weakness could be their exposure to interest rate fluctuations, which can impact their borrowing costs and the value of their debt investments. An opportunity could be continued growth in their specialized real estate niches, while a risk might be a downturn in the broader housing market or commercial real estate sector. In conclusion, this 8K filing is a straightforward announcement of dividend payments. For existing investors, it's good news, confirming expected income. For potential investors, it's a piece of a larger puzzle that requires further investigation into the company's overall financial health and strategy. Alright, that's our breakdown of Redwood Trust Incorporated's latest filing. What's your take on these dividend announcements and what they signal for the company's future? Do you own any of Redwood Trust's securities? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.